So let's talk about what's going on in the marketplace. So what's going on in the marketplace? What is the big story in real estate? What's the biggest thing that's happened over the last few years? What happened? What changed? Interest rates. What happened to interest rates? They went up. So let's do a little poll of the audience. No right, no wrong. I just want to get everybody's opinion. Opinions can't be wrong, so you can't be wrong. Well, let's try to get 100% participation. What do you guys think? Do you think interest rates are high? Do you think interest rates are low? Let's do a little poll. Who thinks interest rates are high right now? Raise your hand if you think interest rates are high right now. Okay. Raise your hand if you think interest rates are low right now. Okay, we're not getting 100% participation. Do you think interest rates are high or low? High. You think they're high. What do you think? What do you think? You think they're high? What do you think? You think they're low. Okay, everybody should participate. It can't be wrong if it's an opinion. I share my opinion. I think interest rates are normal right now. Okay, that's what I think, normal. I've been buying rental properties for 21 years. Most of my rental portfolios have a mortgage between 6.5% and 7%, which by all historical measures is normal. Now, a few years ago, interest rates got all the way down to 3%. Before that, prior to that, when before that did interest rates get all the way down to 3%? When did that happen before that? Anybody know? When did it happen? Yeah, never. Like never. It never happened before in your lifetime, your parents' lifetime, your grandparents' lifetime, your great-great-great-great-grandparents' lifetime. When do you think it's going to happen again? I don't know. My guess, never. That was a weird anomaly, okay? And honestly, right now, by historical standards, things are normal. And I like normal. I way prefer normal, okay? I do residential, I do commercial. When you invest in commercial real estate, we do a lot of syndications. These are typically 5-year deals, right? You buy a property, you hold it for 5 years and sell it or refinance it again. Well, 3 years ago, people were buying multifamily apartment buildings, and it was very competitive, so they were paying top dollar to buy these apartment buildings, and they were financing them with 3% mortgages. And at 3% mortgage, you could collect enough rent to pay the mortgage. But now, all the loans are coming due. Because commercial loans are not 30-year loans, like residential loans. Commercial loans are typically like 5-year loans. Right? So all the loans are coming due. So now these same properties have to get refinanced, sold and or refinanced, right? And now, even if you bought them for what they bought them for a few years ago, right, with a 7 or 6.5% mortgage, you can't generate enough income, right, to pay the mortgage. So the properties are in problem, right? A lot of properties are having problems. We're doing cash calls and all kinds of other things. So that's why I don't like normal. Right? You know, the famous words of Wayne Gretzky, you know, I don't skate to where the puck is, I skate to where the puck is going. When you're doing a commercial deal, you have to ask yourself, what is the world likely to look like in 5 years when this thing is sold or refinanced? Well, if you're buying it at a 3% mortgage, which has never happened before in the history of the universe, is that likely to continue? I would say no, right? If you're buying it at a price where interest rates are normal, is that likely to happen again? I would say yes. So to me, this is a way better time to be buying commercial real estate than it was 3 years ago. 3 years ago was a crazy time to buy commercial real estate. So that's why I like normal. Sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. It's never easy to buy and easy to sell. But right now, it's not that hard to buy and it's not that hard to sell. Right? And I like that, right? Which is why I like normal. Speaking of interest rates, this is an interesting chart of interest rates versus home prices going all the way back to 1970. From 1970 to 1981, interest rates on mortgages got all the way up to 18%. Yeah, so for any of you guys that are belly aching about 7, 6.5, 18, right? That was normal in 1981. Now, another question. When interest rates go up, what happens to home prices? What do you think? Let's do a poll, right? Poll. No, you can't be wrong or right. I want to get everybody's opinion. Who thinks when interest rates go up, home prices go up? Who thinks when interest rates go up, home prices go down? Okay, we got a lot of downs, a couple of ups, and a lot of you are still not voting. Okay, here's what I've observed. Interest rates do this. They go up and down. There's things pushing up, there's things pushing down. You see, real estate really doesn't care about interest rates. Real estate cares about two things, supply and demand. It's the purest market in the world, supply and demand. Only in as much as interest rates or anything else affects supply and demand does it affect real estate. Now, certainly when interest rates go up, right, then mortgages are more expensive, for sure. Fewer people can afford them, that's true, which means there's less demand. So that's true. So that's pushing prices down. But there's some offsets. So what are the offsets? Why did they raise interest rates? Why did they raise interest rates? To battle what? Inflation. You know, they talk a lot about inflation, like, oh, inflation is this bad thing, bad inflation, we got to whip inflation. I disagree. Personally, I love inflation. I just have another name for it. I call it appreciation. Yeah. What is inflation? Money becomes worth less. What becomes worth more? Assets, stuff, gold, real estate. If all of your wealth is in real estate, then you go to bed at night saying, I sure hope we have more inflation. Now, we always have inflation. Sometimes we have a lot of inflation. We had a lot of inflation. How many of you have owned a house for the last 3 years? Who's owned a house for the last 3 years? Nice. You're a lot richer than you were 3 years ago. Congratulations. What if you had 30 of them? What if you had 200? Can't go back, can you? Going forward, you can do anything you want. So yeah, inflation is pushing prices up. There's something else that's pushing prices up. Okay, normally when you look at the market, 2/3 of houses for sale are resale houses and 1/3 are new construction. Right now it's inverted. Right now it's 2/3 new construction, only 1/3 resale. Nobody is selling their house. The economy is not bad. Normally people would be saying, honey, it's time to buy a bigger, nicer house, but nobody's doing that. Why are people not selling their house? Because they got one of those 3% mortgages and they don't want to give it up. So all of that inventory is being held on the sidelines, right? In fact, we don't have enough houses for sale. In fact, you may not know this, but we are actually in the middle of a housing shortage. Who has heard this, that we're in the middle of a housing shortage? We have 6 million fewer houses than we have people that need a place to live. And when you don't have enough houses, inventory, what does that do to prices? Pushes up. So we got things pushing down, we got other things pushing up. Going back to that chart, very interesting. Interest rates versus home prices, going back to 1970. When interest rates went all the way up to 18%, guess what? Home prices actually went up. When interest rates came down, home prices went up some more. When interest rates went up and down, up and down, and up and down, home prices still went up. Now there were bubbles. There's a bubble. 2008, 9, 10, remember that bubble? Little bubbles, big bubbles, there's bubbles, right? But it's not as simple as to say interest rates and home prices directly correlate. So there's things pushing up, there's things pushing down. Let's talk about where it all, what happened. Essentially, the market is flat. But let's get into some details. If you look at Texas, the average price house of Texas is $422,000. We're going to talk about commercial too, but for houses, the average price is $422,000, up a little bit, 3% year over year. And the median price house in Texas is $335,000, up 1.5% year over year. Now, the most important number you should always look at is this one here, months of inventory, months of inventory. If you want to look at one data point, like what's going on, look at that one data point, months of inventory. What is inventory? The way to think about inventory is like this. If you took all the houses for sale in the MLS and you stopped adding any more, we're not going to add any more houses for sale. We're just going to sell what we got and not add any more. The question is, how long would they last? How long before the shelves are empty, right? Before the last house would be sold? And the answer right now is 4.8 months of inventory. That's how much inventory we have. Now, to put that into perspective, they say if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. If there's right around 6 months of inventory, you have a neutral market. we're still in a seller's market. Now, it's not as strong as it was a year ago. Last year, there was 3.8 months of inventory. So last year, we were in a strong seller's market. Now we're in a weak seller's market, but we're still in a seller's market. And that's just perspective. People are like, the market's down. No, actually, the market's up a little bit, and it's still a seller's market. It's just not as strong as it was before. Historic data, 2021, prices went up 18% in 1 year. 2022, they went up another 10.7% in 1 year. 2023, flat. So the market went way up, went up some more, and then it just flattened out for about a year. Okay, that was the correction. The correction was flat. And just over the last several months, it's starting to creep up just a little bit. And by the way, I do want to issue a little disclaimer here. We're not here to try to persuade you of an opinion. Okay, when we think the market's going up, we say we think it's going up. When we think it's down, we say we think it's going down. All of this data is pulled from the Texas School of Real Estate at Texas A&M and some other online resources. So we're just reporting the data. I don't do the market update, I'm just reporting. Going into some of the different cities, Houston, let's take a look at Houston. The average price house in Houston is $423,000, up 5.2%. I think Houston's the strongest market. Median price, $335,000, up 2.7%. Months of inventory, 4.4 months, pretty good. Not as good as it was a year ago. Some commercial data points. Lease prices are up a little bit, 1.6%. Now, when lease prices are up, what does that mean? Are apartments full or are apartments empty? These are full. Prices are up, they're full. When prices are down, they're empty. All right, going empty, going full. History. 2021, prices went up 16% in 1 year. 2022, they went up another 10% in 1 year. 2023, flat. Now, the volume is down. Because of interest rates, there are fewer buyers, but because of people not reselling their house, there are fewer sellers. So when you have fewer buyers and fewer sellers, those offset each other and the market is flat. Dallas, big D. Average price house in Dallas, $509,000, up 3%. Second most expensive major city in Texas. Median price, $400,000, up 1%. Months of inventory, 4 months. Lowest inventory in Texas. Lease prices down 1%, basically flat. There's a lot of new inventory in Dallas, and the prices are still flat. 2021, prices went up 20% in 1 year. 2022, prices went up 15% in 1 year. 2023, they flattened out, up 1%. We'll call that flat. Okay, Austin. Now, Austin is the outlier, and I'll tell you why in a minute, but the average price house in Austin, Texas is $560,000. That's the average price house in Austin, Texas, $560,000, up 1%. And we did a little research to try to understand this. It turns out, where did the name Austin come from? You may not be aware of this. Austin is actually Latin for San Francisco. Yeah. Elon Musk moved to Austin. Okay, Meta, Apple, Samsung, right? All the high-tech companies, and they brought in their high-tech engineers and their six-figure salaries, and they just moved in like droves, and they've driven the prices crazy. Months of inventory, 4.4. I think that's about the same as Houston. But what was the outlier? The outlier in Austin, Texas, something happened that never happened before. 2021. In 2021 in Austin, Texas, prices went up 29% in 1 year. In Austin, Texas, in 2021, there was 0.4 weeks of inventory. 0.4 months, less than 2 weeks of total inventory. In 2021 in Austin, Texas, you put a house on the market, you get 11 offers in a weekend. 1 would win, 10 would lose. The 10 that lost, they'd put an offer on a second house, they got 11 offers in a weekend. 1 would win, 10 would lose. And this would go on over and over again. And then people would just start screaming at their realtors. What are you doing to me? You got to give me good advice. I keep getting outbid. What do you got to do to buy a house around here? And it turns out in 2021 in Austin, Texas, it became normal in that abnormal market to buy houses at 5 to 10% above appraised value. Do you know that a bank will not let you buy a house above appraised value? Did you know that? The total down payment and the total loan cannot exceed by $1 the appraised value. If you really want to buy a house above appraised value, What do? How do you do that? Well, you got to put all your down payment down, you get the loan, and then you got to pile a sack of money on top of that afterwards. And in that very unnormal year, it became normal for people to buy houses 5 to 10% above appraised value. In 2022, it didn't get better, went up another 10%, and then in 2023, correction went down 8. So in most of Texas, went up 30 and it flattened out. In Austin, it went up 40, came down 10 and flattened out. What's the difference? I guess it's a little different. If you bought a house a year ago, you lost 10%. If you bought a house 3 years ago, you made the same 30 everybody else did. And that's just perspective. San Antonio, the most affordable major city in Texas, average price $372 flat, median $309, down 2%, basically flat. Months of inventory for 5 months of inventory, slowest market in Texas. 2021, they went up 16%, up 12% in 2022, down 2%, pretty much flat. So the market's flat. It's been flat. Where's it going next? Well, let's talk about that. What's driving the market? The economy affects it a little bit. Not a lot. Real estate doesn't really care about the economy. During the Great Depression, real estate prices went down a whopping 6%, not much. During the Great Pandemic, right, another 100-year event, real estate prices went up 30%. Right? It's not the economy. The economy has an indirect effect. If people feel good, right, confidence, money in their IRA, they're a little more likely to buy real estate. So it's an indirect effect. Affordability, interest rates certainly have an effect, right? They're pushing down, less affordable. House price trajectory is flat, not up, not down, flat. Housing supply, active listings is flat. Months of inventory is pretty good. Less than 6 months of inventory. Housing permits trajectory. We're not building enough houses. We're just not building them a house. Last year, the population went way up and we're not building enough houses for everybody. So that's pushing prices up. Construction labor growth, let's talk about that for a minute. We have a problem. Contractors, they're dying. The average general contractor is like 58 years old and they keep getting older and they're not getting replaced. So if you have a kid in high school, don't send them to college. Buy them a hammer, okay, seriously. Do you guys know what plumbers are making these days? Plumbers make more money than surgeons. I'm serious, right? General contractors are making hundreds of thousands of dollars. They don't have to work for some idiot, and they don't have any student loans, right? It's like a way better job. It's a way better life. It makes a lot more money. It's more fun. Send your kid a hammer for Christmas. So that's an issue. And then closed sales trajectory down a little bit. Basically, it's turning though. Sales, pending sales is flat. Migration, now this should be the biggest bullet on the page. Not all these things are the same. This is really a triple-sized bullet. Migration is the ratio of people moving in versus moving out. That affects more than anything else population growth, right? And last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Yeah, and there's like 5 million other people, we don't know where they went, but a bunch of them are probably here too, right? And people keep having babies and moving here. We got a great economy. The population is exploding. And more than anything else, that's pushing up on the market. And then, some wild cards. What's going to happen? Interest rates. We just had an election, a couple of wars going on, et cetera. So, I don't know. Let's get your opinion. No right or wrong, I just want your opinion. Who thinks going forward prices are probably going to go up? Who thinks prices are probably going to go up? Who thinks going forward prices are probably going to go down? Okay, well, got a lot of ups and a couple downs. Yeah, our opinion, I'll give you our forecast. That was it, folks. If you were expecting some big market bottom, that was probably it. It went up a lot, it went up a little more, it flattened out, and it just has been bouncing along. And now it's starting to come up a little bit off of the bottom. Interest rates have started to come down. That's really the last thing. If you saw that whole chart, the only thing kind of holding us up a little or down a little bit is interest rates. They are starting to fall. Right, we've fallen 7.75 percentage basis. We're probably going to have one more cut before the end of the year. With that, sales will be up a little bit by the end of the year. Prices will be up about 2%. We just don't see any big thing, right, that's going to change the market dramatically, other than it's probably going to creep up a little bit. And just one other comment: we've been doing a forecast for 20 years, and we've always been pretty spot on. Not because we're smart, just because this is not that hard. Trying to predict the economy is hard. Trying to predict the stock market is impossible. Trying to predict real estate is not that hard. And the reason it's not that hard is because we know exactly how many houses we have. We know exactly how many houses we're building. We know exactly how many people need a place to live. We know about how many people are moving here. We know how many we're going to have. We're going to how many we're going to need. We know just about everything in terms of the supply and of the demand. The only thing we don't know exactly is exactly what interest rates are going to be next, but we can guess a little bit on that. A couple of other quick data points. Multifamily. Dallas, Houston, and Austin, guess what, are 3 of the top 5. So if you're looking to do multifamily, those are great markets to do it in. Now you can do it in all of Texas. All of Texas is pretty darn good. And like I said, I was not a fan of multifamily 3 years ago when it was hot, hot, hot. I think it was a terrible time to invest. And a lot of those properties are dealing with cash calls and all kinds of issues. I think now is the best time in years to do multifamily. And we do all the assets, by the way. We love multifamily. We love apartment buildings. We love RV parks, you name it. Office, not so hot. Office, not so hot. Retail, big box stores going away because of Amazon. Strip malls are hot, though. Little strip malls, neighborhood strip malls, those are hot. Industrial is a mixed bag. Do a little deeper dive on storage. Storage has become very popular over the last few years because it's totally revolutionized because of technology. What's going on with technology? Used to be I had a guy watching the storage facility. The guy's gone. It's been replaced with security cameras and an app. Now you can rent a storage facility on your phone. When you leave, you just take a picture, leave your broom swept clean. They can open and close the gates, everything remotely controlled. So it's a hot market, storage. But I'll tell you, when do people rent storage units? And the answer is when they move. And because the volume of buyers and sellers is down, there's less buyers and less sellers, flat prices, less buyers, less sellers, because the volume of buying and selling is down, storage market's down a little bit. That should start to come up a little bit as interest rates come down more. And by the way, in general, when interest rates come down, cap rates come down, commercial prices go up. So if you want to invest in real estate, you have to ask yourself a question of what's the trajectory, up or down, with interest rates? Because whatever direction interest rates are going in, right, prices go in the opposite direction.